I think it's working. Is it working? So I just delete this one then. What is happening? Yeah, that's a GG's. Missed our setup. It's over. Ah, no, we gotta FOMO in now. Wait, how do I delete this then? Because this is like an upcoming stream thing. Delete. More actions. Delete forever. Okay, wait, I can see. Okay, wait. I gotta change to my trading view. I'm gonna leave that there for now. I think that we're bullish today, to be honest. Let me try to like do announcements really quick. Oh, okay. And then I gotta post this. Our trading blueprint. And then I gotta post this on Twitter. I think that's good. All right, perfect. Got a few notifications we were live, but some don't. Yeah, it's because I kept going live and then went offline and went live and went offline over and over again. I apologize for that, guys. I just have no clue how to stream on YouTube. To be honest, this is the first time I've been using YouTube. Usually, when I stream, it's on Twitch. And that's like a while back because I used to stream on I stream like video games and stuff. All right, so let's get started. What is up, everybody? Welcome to my first stream. I'm a little nervous, not gonna lie, but it's okay. I'm gonna power through. Just doing what I do every day, right? Let me just make sure this is it to the screen. Perfect. Okay. All right. So I'm just gonna give like the game plan for today, I guess. My stream's still working, right? Yo, what's up, Elijah? Okay. You know what? Fuck it. You know what? It's good. It's good. Not touching anymore. I'm just going straight to trading view. If there's a problem, you guys start spamming the chat. All right. So my game plan essentially today is we had SMT divergence on the lows last week, right? We had Wednesday, Thursday, that Q4 reversal from last week. And we started this market maker buy model. And truthfully, I wanted this high to stay open just because right now, if you are in my private group, then in the weekly outlook, I highlighted how I want this high to stay open because right now we're in that IPTA data range, right? We're way past the 60-day now. So we're just waiting for that SMT divergence on the high and possibly look for a shift lower. So if this SMT divergence remains here, then I'm looking for this low specifically because it's IPTA 20-day range, right? So that's time-based liquidity, what I'm really reaching for. But that's essentially like all my analysis based on right now is just based on IPTA data ranges, and that's why if you're in my Discord, you'll probably see me like shorting the market so often is because I'm just waiting. Like it's just very difficult to long up here in my opinion, just because we are super high up in price. So I feel like the way the economy is right now doesn't really line up with where prices are. So it's a, but it's okay. So as of today, this morning, I wanted to long down here, but I missed my setup, unfortunately. Just because we had a turtle soup, right? We had a balanced price range right here. And then we take that low out turtle soup. And so if we drop down to the 5-minute, you can actually see that within this higher time frame PD array, we have a turtle soup here because it's an SMT divergence. So this right here specifically is an SMT divergence with, if I remember correctly, with YM. And so this is the basis of my whole trade right here this morning. Once we got this market structure shift, why do I expect this gap to stay open this morning? Is because we have a breaker block right here, right? So essentially, if I was going to enter a position, I had a long tool here, but I just wanted to get my stream set up. I wanted to just long straight like from somewhere over here and then put my stop loss at that fair value gap. It's permissible if it digs into here because this would be that unicorn model, right? But then down here, I would prefer that gap stays open. If that gap stays open, then we start flying higher. And then if you look at the 5-minute, as you dissect deeper into lower time frames, we have that like the hourly or the 4-hour market maker buy model, right? And then now when we dive deeper and we use that hourly reference point of that balanced price range with the liquidity run, that turtle soup setup, then we can now find even another turtle soup setup within the 5-minute, right? And then now I'm aiming for these higher prices. And overall, what I'm looking for is to trade higher into previous month high. And I want to see whether previous month high will be acting as support or resistance, essentially, because it's a time-based liquidity pool, right? So if we trade above it, then I want to see either support from it, or if we break back below it, then we can start looking for that shift lower and targeting essentially this liquidity pool right here, or even further macro scale, we're looking for this IPTA 20, right? So as of right now, I'm just waiting. It's possible we hit this -5 standard deviation, but like just looking at the monthly chart, to be honest, it doesn't really look convincing that price is just gonna like take that high and instantly drop. You know what I mean? It doesn't look convincing. So until I get that SMT divergence on the daily chart within January 25th and February 23rd, that's really where I'm looking right now. Yeah, but that's really like the framework behind what I'm looking at right now and why I'm looking for longs this morning. Is that a good time of day to enter a position at like 7:30 a.m. time zone for reversals or yeah, reversals? Is that something you look at? Yeah, so I'm not sure if you guys are familiar with quarterly theory, but quarterly theory essentially, Trader Day kind of reverse engineered it from ICT concept. It was like, oh, you know how ICT comes up with his kill zones is actually like if you split a session in 4, then you have your 90-minute sessions, right? And then ICT also tweets out, he says, I can do this every 90 minutes of the day. So learning quarterly theory gives you a very good framework of what to look for. And then you can use the economic news calendar in alignment of quarterly theory to look for that. So for example, this morning, why am I looking for a long specifically here? Because we have our manipulation phase right here, right? We manipulate our low right here within a higher time frame PD array. I think the most important thing this is like, okay, I'll literally give you guys my model. Higher time frame PD array, SMT, market structure shift, balanced price range, or inversion fair value gap. That's literally my model right there. It's very simple but very effective, right? And so now what it comes down to, you have your model. It just comes down to when is high probability to trade. Well, today we don't have high impact news, so I'm not really looking for anything crazy, if that makes sense. Usually on days that don't have high impact news, that's when you'll see me post those 5-second entries or 15-second entries because I'm purely scalping the market. But when there is higher time frame news aligning with my narrative, then that's when I'll go for those swings. But yeah, that's really what I'm looking at right now. Now, another thing is, I know the stream's a little quiet. I would play music, but I think I might get copyright striked, so I don't feel like doing that. But yeah, essentially for today, in my eyes, I feel like the setup has already gone. I don't really want to enter here anymore. And I'll tell you why, like, it's fine to let it run. The reason we don't want to trade here, though, is like, if this right here, we're looking at this as a market maker model, then if we draw our anticipated defining range right here, okay, then we've already left the 50%, right? We're already in premium. We don't want to trade from here anymore. Even if we're up here, we're already in premium. If this is that range we're looking for, because we're looking for that external range, right? Liquidity. So essentially, in my opinion, I think that this long is already gone. Like, I don't really want to enter anymore. Yep, got you. Let me just remove some drawings here so that I don't reveal too much. So down here we have SMT divergence, right? Right there. If it returns to discount, that would be the best case scenario. So essentially, how I like to pyramid my entries in is once again looking for that SMT divergence, right? So I use SMT divergence to identify when accumulation or distribution phase are essentially ending, and we're looking for a new expansion. So from here, we can potentially get like consolidation, right? Because we just took out this distribution phase, and then if we get a rate on liquidity, for example, then this I'm really looking for is SMT divergence right here, and that's when I'll pull the trigger because we dip back into that discount of this range, if that makes sense. And then that's when I'm looking to buy essentially. Example of SMT. Example of SMT would just be like these lows right here, for example. Like you see how NQ makes a lower low and then YM doesn't make the lower low, right? Makes a higher low. Why are you limiting the market maker buy model to that high? Since the day looks bullish, why not aim for previous day high? This is just essentially the low hanging fruit, really. So if I wanted, I could use projection swings as well on this. And using projection swings, I can find this liquidity within the -2, -2.5, right? So from here, you can look at that. And then up here, you have this standard deviation overlapping with -3.5. So essentially, you could look at that as well. But as of right now, if I'm in this market maker buy model, I'm really just looking for low hanging fruit. Once again, we have no news today, right? So I just want to aim for low hanging fruit. And then we have equities open in around 8 minutes. What are the higher time frame PD arrays you look for? Uh Okay, wait. Sorry. I should probably go through all these questions. I'm sorry. Okay. What is SMT? So SMT divergence is when correlated markets don't move in tandem. And it's like people call it like a crack in correlation. And essentially it's when one market like that's correlated to another, one market will make the higher high or lower low, whereas the other market will not make a higher high or lower low. So it'll fail to make that swing high or swing low, whereas what the other market does. So for example, if we're using index futures, then we can look at NQ, ES, YM, and DXY. And then one very important thing to note here is that DXY is inversely correlated, okay? Meaning that inversely correlated, meaning when index futures go higher, then DXY goes lower. When index futures go lower, DXY goes higher. Does that make sense? And so we're looking for right? So we're just looking for one market to make the higher high, one market to make the lower high. That's SMT divergence. We get our market structure shift here, for example, on this market, and then we can look for our, for example, 2022 mentorship entry, right? From this market structure shift, because we have SMT divergence, the market is tipping their hand to us that's ready to expand in a direction, right? Here with SMT divergence. And something I want you guys to like, if you guys want some homework, then something very key is to pay attention to when the market expands. And you'll realize a lot of the times when it expands is actually because SMT is occurring. Looking at market maker sell model on the 1-3 minute, what do you think? The thing is, you have to look at the higher time frame narrative, right? So that's like a major flaw, in my opinion, in ICT's teaching style. Like, all credit to him, you know what I mean? But I feel like a major flaw is just his executions are kind of misleading, where he's always executing on the 1 minute, or sometimes he even executing on the seconds chart, right? And so a lot of developing students will come in and be like, oh, I can trade the 1 minute and just look for market maker buy model, market maker sell model, and just be profitable. Well, that's just not how it works, right? The reason why it works is because ICT has already done all his homework. He probably looks at bonds, and then he looks at DXY, he looks at all the index futures together, and then he just does that macro scale analysis. He probably looks at the yearly chart, looks at monthly chart, weekly chart, hourly chart, all the way down to those 1 minute charts, right? And you have all that context supporting your idea. It's like if I showed you this chart right here, yeah, I think that, okay, so this looks like a market maker sell model, right? It's like, okay, so why do we stop here though? Without the hourly chart, you don't know why. Like right here, for example, this looks like a market maker sell model because we probably had SMT divergence up here. Start trading lower, market structure shift, right? It's like, okay, why didn't this fair value gap work? For example, we just kept going higher. It's because you don't have the higher time frame context, right? So if we zoom out to the 1 hour, suddenly it's so much clearer, isn't it? Where it's like, oh, okay, we're actually inside this massive market maker buy model on the 1 hour, right? And then, like, for example, if you zoom out even more, if you look at the daily chart, let's refer back to here, okay? It's like if you refer back to the daily chart, it's like, oh, we're actually in this massive market maker buy model, so that every time, you know what I mean? Makes sense. So it's always, you have to use that higher time frame context, and that higher time frame always has more influence than the lower time frames, and that's something very key to and important to remember, especially with SMTs. It's like some people ask me, which time frame should I look for SMT on? I'm like, well, if it occurs on your 4 hour and it occurs on your 15 minute, then your 4 hour has more influence over the market rather than the 15 minute. So always higher time frame. It's like high card rules, right? As Casper taught me, high card rules, which meaning the higher time frames always have more influence over the lower time frames. I personally do not watch the bonds, so, but I think if I remember from his teaching, it was like 10-year, 20-year, and 30-year notes or something like that. Hey, let's go. Congratulations on the prop firm challenge. Or funded account now, I guess, right? Or is it phase two? Good stuff, though. Really good stuff. I'm glad that I'm able to help. It's my end goal. Right? So right now, I'm just watching this, and unless we get like some sort of return to discounts, like I can't do anything, right? And here's my like low key my prediction is that 930 will drive price lower due to swing and then we'll go higher, but I don't want to put my money on it because I'm unclear on that. But that's just like tape reading wise, that's just what I'm thinking right now. Oh my gosh, 84 viewers. What the heck? Casper just posted something similar but using a higher fair value gap. I see. So, well, he is my mentor, so it's like a lot of my analysis will kind of overlap with his as well. Well, I'll just shout out all my mentors right now. Well, one is ICT, right? And then two is market make MMXM trader, three is Casper, and then four is Trader Day. And then I have a private mentor, but he's like not public, so I'm just not gonna say anything. I'll just annotate this for you guys really quick. Sorry about that. Just in case you're like joining a little later. So here is a crucial area, this low specifically, is I'm looking for that SMT divergence if we can get that. So right now it looks like NQ is reaching for that low, whereas ES and YM is struggling. I have another chart on my second monitor, and that's the chart I'm trading on because it's my first stream. I'm kind of nervous like trading in front of people, so I'm just gonna give you guys my opinion and tape read for you guys. I want to influence your decisions though. I've heard people say that technical analysis works more effectively in forex than crypto. What are your thoughts about this? Here's the thing. I think that people, I think that ICT concepts they work in every market, and the reason I say this is because I've looked at every single market. Like I actively have a template on my trading view to study every single market that I'm interested in. Or like for example, gold, I've been tape reading that. Euro USD, I've been tape reading that. GU, I've been tape reading that. Right. So a lot of these markets I've been tape reading, and they all work. It's just in my opinion, they work in different time frames. Like for example, when I'm trading Bitcoin, I'm trading it on weekly and 4-hour time frame. You know what I mean? Okay. See what happens here. YM has just made a lower low. Not yet. Now it has. So because YM made the lower low instead of NQ, I'm assuming that if NQ is bullish, it's going to have a much more volatile run higher now rather than having this turtle soup. So I'll annotate this for you guys right now. SMT with YM. Okay. So that gives me confidence that they're ready to start expanding higher because this phase right here, right? You want to see symmetry in the markets essentially, right? This phase has ended. Means this accumulation phase done and we're looking for higher prices. Can you tell everything you went through to learn like videos or playlists? What do you mean by that? Like ICT playlists? ICT cons for ICT content, I believe in first episode of 2023 mentorship of ICT, he actually goes through his YouTube and notates like if you're brand new here, these are the These are the courses you should look at first, or the playlist you should look at first and study, and then 2023 will make a lot more sense. In my opinion, I think 2023 has like the most important information, but also the most advanced information. That makes sense. So it was very confusing for a lot of people, including myself. I was super confused. It's something you have to like backtest a lot. What? Yeah. So on ES and NQ, we've taken this high objective. So if we begin displacing, sorry, let me cover this right now since it's happening. If we begin displacing lower from here, then this high is still intact. Okay. And so this would start playing into that narrative. I want the daily high to stay open, if that makes sense. And then if we get a shift lower, then you know what I see right here is a market maker sell model, right? Original consolidation, accumulation, right? Can you advise a drill on identifying market maker models? Yeah, I got you. I'm gonna show my chart colors really quickly here. So this is my up candle, and then this is my down candle, and then this is my background color. Yep. So if we're looking at the hourly chart right now, we do have SMT on this high. Let's see what happens here. We no longer have SMT divergence here. So a drill on identifying market maker models is like just understanding what the pattern looks like, right? So it all stems from an original consolidation, right? It is really just a pattern in the market. You just have to use it at the right time. Okay. So you can look at it like this. You have original consolidation, you have your accumulation, smart money reversal, and then you're gonna look for that, right? And so from here, what you're really looking for the smart money reversal is one, you have a higher time frame PD array, okay? Higher time frame PD array right here. And so within here, now we're looking for SMT divergence as well. And right here, SMT divergence, and then we'll look for that lower prices into original consolidation low. And that's essentially it. So the drill you would really do to like practice this is just look for this pattern. That's literally it. Just look for a higher time frame PD array, look for SMT divergence, and then look for displacement. And then you can also use projection swings if you want. Right? So you projection swing, you have -2 to -2.5, this low, this accumulation low. And then you have another -3 to -4, this original consolidation low. So that's really just what you're looking for, and annotate that in the charts. Are we not in seek and destroy profile? I'm waiting right now because this high is still intact right now. It looks like it's a possible draw. Let's take a look. Yeah, because this does not occur within a higher time frame PD array. So in my eyes, right now, I'm just waiting. We are back in discount as well. if we're using this range specifically. But I don't like this displacement lower. The only thing. It's like if I'm looking for entry, I would like I don't know, consolidation and just like a tap and then go. Not just a straight up, you know what I mean? I don't think that's gonna happen. Good morning, Jomar. What's my bias? My bias for today is like long, to be honest, but overall today I'm expecting consolidation. If we get a shift on the highs, or not, sorry, if we leave this open and we get a shift lower, then I'm expecting this high to just hold, to be honest. And then this is SMT divergence on the highs, and that would play perfectly into the higher time frame narrative. And that's just what I've been waiting for, to be honest. Mhm. This is a propulsion block right here. If you guys, one second. All right, nice, beautiful. What higher time frame PD rate? What's my thought process today? I'll just show you the hourly chart. I'm just gonna delete all that. So this is my thought process today. Is we have a very big market maker buy model on the hourly chart. In terms of PD arrays, I mainly focus on fair value gaps. Fair value gaps, balanced price range, and inversion, like fair value gaps, but it all stems from fair value gaps, right? So that's really what I look at or look for. I still think that the immediate draw as of right now is these highs. I'm just waiting right now to see how price presents itself. I don't use the regular trading hours, but if you look at that, this is also a good gap to use. It's I think it was like in ICT's one setup for life video. If you guys want to check that out. No worries, I got you guys. That's what I'm here for. Just explain things the way I see it. I don't want to say I got everything down perfectly because I am still actively working on some things. Like, for example, I'm still working on turtle soup entries and stuff like that, right? So, you know, it's definitely a learning process, but I just try to help where I can. You're gonna be better than me. Romeo stuff. Honestly, I haven't studied any of Romeo stuff. Um, Turtle soup is confusing to me. Yeah, it's also kind of confusing to me, but I've been looking at Dexter stuff as well on Twitter, and essentially it's like he says like four standard deviations essentially where you see your turtle soup. And that's where I think it's like pretty cool because if you look at the 1 hour chart, it's like previous month high is like right at -4 standard deviation, looking for that turtle soup here. Possibly if we trade higher into it here, right? Turtle soup. How long did it take me to achieve consistency? It took me as long as simplifying my trading plan, to be honest. So the sooner you simplify your trading process, the faster you find consistency. All right, I just took a really quick long scalp there because we had SMT divergence on the 15 seconds. I still think the high is over here. That's really what I'm looking at, but this is where I would take a partial just because it's a fair value gap with displacement, so just be careful of that. Do I only take unicorn trades? No, not anymore. I used to. I used to only take unicorn trades, but I just like been refining my plan. Thoughts on ES? I'm gonna have to take a look really quick. I think all the markets are going higher as of right now, to be honest. I don't see any reason why not. I was looking at this, to be honest. This is where I entered my trade. Is we had an SMT divergence right there, and then I took a long right here on this balanced price range, or once this inverted, and then I look for that 5 minute fair value gap for take profit. It was a pretty short scalp. This is a 2R. And then if this is a market maker buy model, I'm looking at these fair value gaps, inversion, right? We invert that. Now we look for support from here if we're going higher. And then we have another one right here that we could possibly look at to invert. So we're kind of just stuck in here right now. I would like to see some sort of displacement above it if we are bullish. But I'm probably done for the day. I just wanted to get this day out of the way. There's no news anyways. I do know ICT tweeted out like there's a orange folder where a FOMC member is talking, and he said his silver bullet setup is gonna be like see if it presents itself after that. So I mean, if you guys trade the PM session, then feel free to take a look at that. Let's take a look at ES really quick. So ES, essentially the same thing. You have your turtle soup entry right here, inversion fair value gap, balance price range. You could have taken the long from here. Target these highs for that original consolidation. Let me look more macro scale though. How many years have I been trading? I started trading July 2022. Yeah. I think it's just like a matter of like intentional learning, and I also got very lucky, right? In the aspect I had so many mentors. Is like I got very lucky in that aspect for sure. I wouldn't say lucky, I'd say blessed by God. So here we do have SMT, by the way. Sorry, I forgot to annotate that for you guys. This is SMT on the, I would say 4 hour, to be honest. between Friday and Monday, right? So we have Q4, Q1. What can Q1 be? It can be either X or A, right? In terms of quarterly theory profile. So if we have an SMT here, we can expect, and it's high impact news too, right? So if this is a SMT, then we could look for some sort of continuation higher. You want me to like give you guys a model right now? I actually like I literally gave it to you guys already, but um SMT execute on market sugar shift, balance price range, inversion fair value gap. You pick your poison. All right, there's your trading model. It's that simple. Really, 3 steps. That's all it is. Look for a higher time frame PD array for SMT divergence. Execute on market structure shift, balance price range, inversion fair value gap. That's it. Simple, isn't it? Right? And then if you watched my time frame alignment video, well, really credits to market maker MMXM trader. But yeah, I'll show you an example. So on ES, for example, you can either look at this higher time frame fair value gap, or you can look at the 50% level of this order block, whatever you want to choose. Right, either one works. And then so we look, okay, well our higher time frame context is bullish. So once we trade into um this higher time frame PD array, I'm looking for SMT divergence. So we get SMT divergence down here, right? And then hourly fair value gap. I think it was a fair value gap. On NQ it was a balanced price range. That's why I like NQ a little more. How do you find bias higher time frame? I made a video, bro. Internal range and external range. It's really simple. I'm being so serious. This is my thought process. It's like, okay, on the monthly chart. Listen, if you guys watched my was it my weekly reviews, like when I first started this channel, then you will see that all I did ever since July was like this. Let me remove all this. All I did since July was, okay, external range. Where's my internal range? Okay, we have internal range in discount. So on the daily chart, wow, we framed our bearish bias already, right? And then on top of that, what is this? This is July right here, okay? So if we're looking at July, we're looking for a quarterly shift. What do we get? We take external. Okay, we take this as an external range high, right? On monthly. Okay. And so from here, I'm like, okay, it's July as well. We're looking for that quarterly shift, right? So from here, you can look, oh, we got SMT on the highs. All right. And so from here, now this right here was a market structure shift, but you can also look at this one. This one's a little more clear. So you can market structure shift after that SMT divergence occurred, right? And then now you can look for that bearish bias. That makes sense? If you want to add even more confluence, I don't really want to complicate it for you guys, is you can just look at it like this. There's also IPTA data ranges, right? I actually covered this in the private community, but I'll just do it for you guys. Right, so this is the IPTA 20. Once again, you don't need this. I'm just showing you like spotting higher time frame liquidity, like time-based liquidity. Right, so you want to look like time and price, remember. So right here we have quarterly theory, like quarterly shift, not quarterly theory, sorry, quarterly shift. So this is July. We're looking for quarterly shift already. So from here we get SMT. So we can use our IPTA data ranges. There's our 20-day low, 40-day low, and 60-day low. So within 20 days of this projection right here, sorry, let me move this over. Right, within 20 days, I'm looking for this low. We take that low. What happens? Okay, we took external range liquidity. We're looking for internal range liquidity. Where do we have that in premium? Oh, we have one right here. Okay. From here, we have internal range liquidity, or not really internal. Actually, yeah, I would consider that internal because it's a high. Internal range liquidity and if this fair value gap, right? And then we start trading lower. So by the 40th day, what am I looking for? IPTA 40, right? And this is why ICT called this like literally at the start of July. He was like, oh, we're going to this low. But imagine how many people got chopped up right here because they're like, oh, we're supposed to go to this low. How come we're retracing? It's not timed yet. That makes sense. So you have time and then you have price. Okay. Time based price levels are very important. So what do we do at the 40-day low? Create equal lows, right? And then trade higher, and then we failed to meet that 60-day low. And then this is the 60th day that we project out and we start shifting in direction again higher, right? Yes, exactly. So I expected a run to the 60th day. But if you look on ES, if I remember correctly, this is the SMT divergence. What is this right here? Well, this is the IPTA 60, right? What happened? We had SMT divergence at time-based liquidity. You know what I mean? I hope this is sparking some things in your brain because, like, this shit's amazing. Sorry for my language, but this is actually amazing. And so we can now draw from this low all the way out. This is 60 trading days. I'm looking for that shift now, right? I'm looking for SMT divergence if it provides it to us. And this right here, you can that's a 4-hour SMT divergence down there. So you're really looking for IPTA data ranges either on the daily or the well, you're looking for a daily, but then the SMT divergence you look for a daily or 4-hour. Did that make sense? And something I can show you guys right now is this high right here was the IPTA 60 day. Sorry, Daniel. You can always rewatch it. I think I just get like really into the zone. I guess I just go through it. So this IPTA 60, right? The IPTA 60 high. And what happens here? When does retail support and resistance work? Is when it's time-based liquidity. Yeah, I'll look at price right now. Right now, all I see is this SMT divergence on the highs right here. So if we're going lower, I would expect this is where I want to see the turtle soup if we're bullish. What series does ICT teach us in? I believe it was five, month five of core content, if I remember correctly. You'll see like if the data ranges, open flow, and stuff like that. Mm-hmm. Wow, this looks like a fire trade if you shorted this. And I do have some things that like tell me that this was gonna go lower, but I can't teach that right now. I just can't, cause like out of respect today, I can't teach that right now. You short on the 1 minute? Then that's fire. That's actually insane. How do you get into Day's mentorship? Unfortunately, right now it's full, I think, so you can't really get in. But I think there is a wait list or something. If you go on his Twitter, then there's like a link there. Who's Day? Day is Trader Day, the guy that reverse engineered quarterly theory or reverse engineered ICT to create quarterly theory. What time frame do you find your SMT though, and entry wise? So it really depends on what time frame you're on. So it's like if okay, so think back to time frame alignment. It's like if I'm using a 1 hour PD array, then I'm looking for a SMT on the 5 minute within this 1 hour PD array, which we get right here, for example, right? The short trade 622 right here. This fair value gap. Oh, that's a fire trade. I think this is a valid trade because you traded a market maker sell model, right? Right. This I would be looking for SMT divergence here. So if there was SMT divergence, I think that's valid. It like in my model. Like I'm not saying it's valid or not, but it's like in my model or not if it's valid. Yeah, we do have SMT divergence here. So that would be a valid trade. I wonder if there's a higher time frame PD array for that though. Six. Oh yeah, there was a 1 hour fair value gap. That's valid. Nice. Very nice. So right now my thought process is that the narrative of the macro sentiment is like playing out right now, right? Going back to that daily chart, looking for that shift lower. If we continue to the downside, then I'm expecting this just leave open, and we could possibly get like a shift here. And then now, if this is the SMT, we can look for that IPTA data range low, right? So 20 trading days back, this is the low right here. So we can look for that low. Macro scale. That's my thought process as of right now. But price is just super choppy right now. So this is what I need to see before. Because if we leave this open, then we have, once again, SMT divergence, right? Super important. And then if we look left, this right here. Is that it's an all-time high, right? So if we get SMT divergence, that would be nice. And all-time high is a time-based liquidity, right? So you see how we're finding resistance here? If you guys want to learn more about market maker models, definitely check out Zeus's YouTube video on market maker models. It's completely free, and he explains how you can use previous cycles as dealing ranges essentially. So your previous week high and low is your dealing range, for example, or your previous day high and low can be your dealing range, and you can look for market maker models within these ranges. Very good stuff. But once again, just to simplify things, one, higher time frame PD array, two, SMT divergence, three is looking for market structure shift, looking for balanced price range, inversion, fair value gap. Number three is the easiest part. That's just your entry model. I share the link through my Discord. Yes, I got you. I'll send it right now. I just have to find the video really quickly. I'm just gonna actually send his YouTube channel because that's pretty like amazing already. Send it. I'll send it in general. Yeah. Okay. Amazing. On the day's waitlist. Nice. Good stuff. He actually teaches real gems. I've never seen anyone like that man is a smart man. Like the concepts he teaches only exist because of quarterly theory. If quarterly theory did not exist, those other teachings he teaches would not exist. If you guys are enjoying the stream, then feel free to join my Discord. I'm pretty active in my Discord as well, so if you guys are interested, I can send you the link. Otherwise, completely optional. I'm gonna be streaming on YouTube every Tuesday, but if you just want to ask like more Q&A, then I can send the Discord link. Oh, thanks, MK. Hit the likes. It's looking pretty good, guys. I'm not gonna lie. Got this unicorn model setting up. You know what I'm saying? I love that. Looks pretty good. Looks pretty solid right here. I'll give you guys a bias for the rest of the week. We also have equal lows right here. So this would be like that first target, in my opinion. Thank you, Bacon. I appreciate that. Can you use the original BPR's dynamic support and resistance now? Yes, I can. So when referring to fair value gaps, I think the most important thing is to look if it's been respected, and that makes it like like higher probability. So right now I'm looking at that. So why is this important? Because we have unicorn model, balanced price range, order block, right? Breaker block right here, fair value gap. That's the unicorn model, and then we also have a balanced price range. There's equal highs and NQ on the 1 minute that need to be cleared before we go lower. These equal highs up here. Well, seeing as this is SMT divergence, I really feel like it's not necessary. It's definitely possible, but I just feel like it's not necessary. Oh, another thing about SMT is just pay attention to the most recent SMT, in my opinion. Is because like SMTs are everywhere. Okay, just pay attention to the most recent one. Yeah, so those equal highs, I feel like it's not necessary to go all the way back up. It's possible, but I think it's not necessary. Took a short on NQ SMT with ES 1 minute market structure shift. Amazing, bro. Good stuff. I took a long for 2R as well, like right here. This retracement candle on the 15-second. I didn't realize I was so offside today. But like I said at the start of the stream, it's just difficult today. Like it's just difficult right now to be longing. It's like it's so much confluence is pointing to go short. But I just essentially looked at this SMT divergence with the balanced price range, right? SMT divergence. I longed from here to our something like this. But like in reality, it was just like a 5 minute fair value. That's why I exited. Is the 5 minute fair value gap. But I didn't know that 5 minute fair value gap would do this. You know. Today was manipulation. Honestly, like right now, looking at the profile of the week, it's like if you zoom out, going to pay attention to the weekly open. Let me put it right here. Yesterday honestly just looks like consolidation if you're looking at the candle bodies. So today could possibly be manipulation, right? So we could see manipulation, a little bit of consolidation. And then Wednesday, I don't know. I really feel like I don't know. Right now, in terms of economic news calendar, it just doesn't like line up. So it's like this week, I'm going into this week expecting XAMD, but if that's not happening, then it, you know what I mean. It looks like AAMDX so far. I am on the wrong market. It would have been nice if this here was a SMT. Daniel, I just use the one that's most recent. That's what I look for. The most recent SMT divergence. And when you use SMT divergence, focus on time as well. Time is a very important factor for SMT divergence. One day we're gonna get ICT in here, you know what I'm saying? Yeah, that was a turtle soup on the highs on the 15-minute. Yeah, so whenever you're at SMT, in my eyes, whenever you're at SMT, that's turtle soup. Because you get SMT, you get that expansion. Really nice. Yeah, lots of questions coming away. Got you, bro. Q&A in the Discord. Okay, so for those that are that are enjoying the stream and want to like continue working with me, I guess essentially is like you can join the Discord. I'm gonna be hosting Q&A on Mondays. Uh, live trading either Wednesday or Thursdays, and then weekly reviews on Fridays. So feel free to join the Discord if you want. You know what? I'll just post the link. I got you guys. Give me 1 sec. Have to sign into chat. Okay. I think does that work? Yeah, that works. Okay. Um yeah, I think like now we kind of just wait, to be honest. I'm not super interested in much. Like we already got that expansion. As of right now, this is when I would just be like close the charts, do something else. Like possibly you can wait for another setup, like a retracement setup. We have SMT lows between NQ and ES. I don't see it. I'm missing. Is this? Oh, they're both NQ. I'm actually trolling. Honestly, I would just say I think that this is so close, and with this displacement, I'm honestly like I think this low is still gonna be taken. I was actually trolling. It's my bad. I think we still go lower. That's my hopium. I hope that this daily does not get taken. Because if this shifts lower, we're entering swing trades, baby. Going all the way down. I also want that to happen because, okay, if we look at DXY, shoot, I don't know if I can show you guys that. Okay, we'll look at this chart. If we look at DXY, I did this in my weekly outlook for the Discord. is we're looking for that previous week high and also this pool of liquidity right here with this inefficiency, right? So once we tapped into that, why I'm expecting bearishness too is because I'm expecting ultimately this high, right? And this is that 60-day for the IPTA. So I'm expecting up direction until March 21st. What do I think about the silver bullet model? Amazing. Love it. If you trade like DXY, this right here was the silver bullet model. Right here. Into this liquidity pool. You see how it like just expands really fast? Silver bullet. Like if you're trading a smaller scale, that is. Right, silver bullet. Your turtle soup right here. Expansion higher. Right? Super quick to your target. That's why ICT loves this setup. Thank you, Megan. With regards to the hourly unicorn potentially playing out on NQ, would you drop to a lower time frame to refine that entry for a better stop loss? Yes, I would do that. So right now, I don't like this bottom wick. So once again, I'm just waiting, right? Just being patient. This looks like a very clear low resistance liquidity pool, but again, we're just kind of back into the range. So I would say this is the dealing range we're dealing with right now. It's high to this low. So if we trade back into this unicorn, I want to drop down to the 5-minute and see like displacement from it. Does that make sense? Because if the unicorn model is one of the strongest algorithmic entry drills, right? Then we're looking for displacement right away from that unicorn model. Does that make sense? But with this right here, it's not very convincing, I'll be honest. I can see the market going both ways. So I will just simply stay sidelined and scalp. Explain the unicorn a little more in depth. Have you seen my YouTube video on it, Megan? I go like pretty. I feel like I go pretty in depth in that one, but if you haven't, definitely check it out. If you did and you still have questions, then feel free to ask. Okay, so who would like to see my journaling process? To end the stream, essentially. Okay. Yeah, so I use Notion. I'm gonna... Can I share that somehow? Okay, so let me just add a new screen capture, I guess. Play capture. Okay, you guys can see that, right? Wait, let me hide that really quick. I don't I don't want to leak anything on my second monitor. Oh wait, I think I just leaked everything. It's all good. No worries. All good. I don't think there's anything to leak there anyways, but you know, we're good. All right, so here, so what I'll do is I use my trade journal template, right? So I just create new. Today is February 6th, right? And so I traded NQ today. Trade details NQ long, expecting H1 BPR to hold. Okay, and I just like put like a brief description of what it was. It was a win. Market side was long. I usually just go in here and then fill all of this out. So my entry model was today a, honestly, I want to say analysis based. I feel like I didn't follow my model to a T because there was some things that I wasn't able to annotate. So I'm just gonna do that. So I'm gonna put for my trade rating, I'm actually gonna put, so I based my trade rating based on like, one, did I follow my plan? Two, how did I feel during the trade, right? Like, what did I enter the trade because of FOMO or stuff like that, for example? So I'm gonna give it like a 4 out of 5 because I did follow my plan, but I just missed a couple things. Uh, Framework, I'm gonna say, I'm gonna say hourly. So this is where like, what's your trade based off of? And mine was based off of the hourly to 5 minute, right? Actually, I can add to this. So I'm just gonna do that because I executed on the 15 second. And so mistakes I would say is trade idea didn't follow my plan necessarily. And then profit I was plus 1%. I would say 2R, right? Because I essentially equate 1R or one reward or one risk, sorry. One risk is 0.5%. So I risk 0.5% per trade, essentially, and I targeted 2R here. Trade duration, it was actually extremely fast. Just need to clear all these drawings really quick. The BPR used entered on this candle right here. Targeting 2R. Something around here. And then, so I would now, for trade duration, I would just see how long it took. So 3, 4. It took 8 bars of price, or 6 bars, sorry. So a minute, 30 seconds. So from here, I would go trade duration. I count it in terms of minutes. So 1.5 minutes. Very quick trade, right? And then from here, additional tags, you can add whatever you want. So it was a 2R win, but my 4 standard deviation was a loss. And I like to track this metric because it's important to understand when I'm like, right now I'm studying standard deviations, right? So it was like, for some reason, my -4 standard deviation was not hit, right? And that's because I was offside in the market. Okay. So then I just like to add extra notes there to like study different take profit levels. And so from here, I have a template in here called statistics and reviews. And I just use this template. NQ1. Is Tuesday, 6th, 2024. Just put in the date there. And from here, I can just change that. Wait, am I trolling? Why is this all filled out already? Wait, I'm actually like confused now. All right, I'm gonna just keep doing this. Is it changing this though? No. Oh, it is. No, I messed it up. All right, I gotta change this. Good thing I only put in the date. Q5th. Okay. And that should not have changed anything here, right? Just make sure. I'm kind of scared now. But I'm so confused. Why is everything going wrong when I go live? I think I maybe edited it by accident. I am sorry. I messed this up, so. Okay. That should be back to normal. Okay, okay. We're back. We're back. Okay, so from here, I just put in like all this information essentially. (2024) open date 3/6 2024 at, and then I just look at the time that I executed, so it was on this candle, so 9:41:45. Okay. AM EST, or you don't have to put EST. I'm just kind of putting it there, and then closure date, right? It's always important to also track how long your trades last, right? Or how long it takes to hit TP. And the reason why it's so important is before I started tracking this metric, I would like find myself being impatient a lot and stuff like that. But you realize that when you use different time frames, it takes different times to play out, right? So when I trade on the 5 minute, it actually like on average takes like 1 to 2 hours to play out, for example. Whereas if I trade on the 15 seconds, 5 seconds, it only takes 2 minutes. So if I get used to scalping right now, when I enter a swing trade when the higher time frame allows me to, then I'm gonna be so impatient in that, right? So you need that data to be like, okay, so swing trades usually take me like weeks, or that would be more like a position trade. But like just for example, tracking that metric is pretty important. Okay. So continuing forward, now we're looking for the close date. This is essentially just the time. So I closed it. Let me check my other screen. 15-second chart. Goes at 9:43 30 seconds. I wouldn't say I like stopped trading unicorn because like when you're looking at this balanced price range, what is this really? Oh well, you have a breaker right here, right? Fair value gap, balanced price range. Boom, unicorn model. You know what I'm saying? So it's like once you understand, it's really just confluences. It's not necessarily I'm only gonna trade when this happens. You know what I mean? It's like I see a balanced price range, then it's like breaker block here, right? That's a unicorn model. I just like don't really talk about it because I'm using the PD arrays by themselves rather than me like, oh, unicorn model. You know what I mean? Does that make sense? Like I'm looking, oh, bounce price range breaker. Okay. Oh, it was 8 bars. Sorry, 2 minutes. 2 minute trade. Forty-three, 45 a.m. Right, 2 minutes, and then contracts traded. I only traded one contract here, so net P&L 1%, and trade risk 0.5%. And also another thing, get comfortable thinking in terms of percentages or in R multiples, okay? Because we don't want to think in like specifically USD, and this is just like to scale, right? In order to scale, it's like if you're thinking, let's say I'm trading $100 now, and then I scale up to like I'm trading $1,000. That's like 10 times the amount. But if you think in terms of percentages, you're just trading your edge, right? So it makes it a little easier in that sense. Line entry price, where is this? 715. Realize entry price and stop loss price. That would be 17,708. Profit target price was a little higher than where I exited, which was that 5 minute fair value gap. If I can find it, I can. So that would be 1730.75, and profit was a little over 2R. Yeah, take a look really quick. Also, this might seem tedious to you guys, and it is, but this journaling is like the sole reason it stopped me from like over trading. Is like if I overtrade, I have to journal every single trade. Imagine how long this would take, right? I just do like 2 trades maximum per day. So this was a 2.52. Sorry, 1 second. I'm just doing something unrelated. I I realized I just like literally stopped talking and I was looking at my phone. How do I determine a valid inversion fair value gap? So I just use Dodgy's rule of if there's an inversion fair value gap, then I look for only one fair value gap in the price leg, whichever time frame has that one fair value gap. But then for my model, essentially is like I just enter on inversion fair value gap, balance price range, or that market structure shift. All right, let me continue this. 1.26%. Realized exit price was and R multiple was originally it was 2.52R. Realized was 2. So now we get to the screenshots part. So we just annotate what we're looking at, right? So daily chart, once again, just annotate your thought process here. So I'm looking at this high. Would like SMT. All right, so I'm just gonna annotate that. So I would screenshot that and then go to my Notion, paste it, and then go to my hourly chart. Yes, sir. Dodgy is the inversion fair value gap. So from here, I would just put replay mode just to make it a little less messy. Actually, no, I'll just do this. It's fine. And so from this hourly BPR, right? And then I'll annotate this low as well. Liquidity sweep. That's what I frame my trade on, aiming for this target right here. And I'll screenshot that again. Paste it into my Notion. And then you can now go to your execution time frame, essentially. And I'll use replay mode here to make it a little cleaner. So from here, I'm looking for, we have that SMT divergence. And I was looking at this 5-minute propulsion. I just like to like clean things up. See hourly BPR, right? So from here, this is what I was looking for. And then we can go back here, just paste it in, repeat the process. And then after that, drop down to the 15-second, right? Gotta get through the boring stuff. You know what I'm saying? It's just part of the process. So from this 5-minute propulsion block, drop down to 15-second. We also have this 5-minute rally gap. And then we had this balance price range. Right, so then now we have that balance price range. So we entered our trade at 17,715. Stop loss, I need to check where that was actually. I think it was the bottom of this candle though. 17,708. Right here. And so I took that long into this level right here. Right, and then I'll just annotate it like this. And I'll screenshot that. And then I put it back into my Notion once again. So why did I enter my trade? Expecting daily to hold the high as I would like to see SMT quarterly shift. And then hourly lows with okay, so where did I decide to end my trade? Didn't like how price was reacting to the 5-minute fair value gap in premium. Stalled too long. Good. Followed my plan. Actually, I say good. Followed majority of my plan. Immediately went to target. So not really much to feel. How do I feel exiting the trade? Really good. I felt great because who doesn't love a 2-minute 2R? You know what I'm saying? Position size was one contract to account for 0.5% risk. I traded a 50K account today. Majority of it to annotate publicly. Do my research before streaming. All right, perfect. So that's how I do my journal essentially. I know that took a while. Sorry. Just it was a little different cuz I usually do it on my main monitor. But yeah, I just like very quick notes, right? I know this process wasn't quick, but once again, this is something I do personally to help me combat like over trading because after if I have to journal like 50 of these, bro, that's gonna take me all day. You know what I'm saying? I don't want to do that. So yeah, not bad so far. I have a couple more trades I didn't include in here, but they're like from January, and I'm not gonna lie, I kind of slacked on those, but I'll get right on that. You know what I'm saying? Yeah, so that's how I journal my trades, and I hope you guys enjoyed this stream. Once again, if you guys have more questions, stuff you want to ask me, then feel free to join my Discord, and then we can talk there. You just talk in general chat. Um, I hope you guys enjoyed this. When will I be streaming again? So I'll be doing. So for my Discord, I'm doing Q&As every Monday. Uh, I'm live trading every Wednesday or Thursday, and then for weekly reviews, I'm doing that every Friday, and I do weekly outlooks usually every Sunday. And then on YouTube, I'll be streaming every Tuesday. Um, yeah, I think that's. And then I'll just include my links one last time for anyone that does want to like join. Here you go. You can also see in the description down below the link. Other than that, thank you all for attending. I appreciate it. And if you guys are still trading, I would suggest waiting for the PM session because there's news, there's orange impact news, like medium impact news at 12 o'clock. So just be careful. And then when that happens, I would one either tape read or two just go for like low hanging fruit. Yeah. So yeah. Take care everybody and stay safe in the markets.